Yesterday, the real estate index was the top sectoral gainer. The index was up more than 3%. A combination of factors, very strong quarterly updates coming in from Godrej Properties, Shobha Developers, and plus last week RBI decided to pause on further interest rate hikes, and that provided some comfort to interest rate sensitives as well. So to talk more about the demand on ground, we're joined by Ghulam Zia, the Senior Executive Director at Knight Frank, and in moments from now we'll be joined by Navin Raheja, the CMD at Raheja Developers, and Anuj Puri, the Chairman at Anurag Property Consultants as well on the show. Gentlemen, thank you very much for joining in. Mr. Zia, could you, explain what the kind of numbers that we've seen, the buoyancy in numbers from Shobha Developers or Godrej Properties? We know there was a cap on capital gains tax, but that was more for ultra luxury segment. These companies like Shobha Developers, for instance, operates more in the mid-market segment. So do you think the numbers that we are seeing are sustainable, or are you seeing now some fatigue?
First of all, let me just put something in perspective. You know, this entire long-term capital gain issue that we were highlighting is so small, it is so restricted to the upper end of the market that even if I talk only Mumbai market, the apartments above 10 crores were not even 2% of the overall transaction in the last month. And that has been so. And then talk about, say, Delhi, even the next costliest market, Delhi, that market has barely any effect of this long-term capital gain thing. So the upper end market traction that we are looking at has been actually there for quite some time and not so much affected by, I'm sure a few of those buyers would have made those hasty decisions to buy because of the 31st March closures, etc. But that said, the movement in uber luxury, the upper luxury market in Mumbai, Bengaluru and Delhi has been there for a long time. So if your question is about sustainability, well, I don't want to doubt it, because instead of whatever one or two transactions that would have seen, we would continue to see a lot of those transactions in coming months. So I don't really see any worry on the upper end of the market for sure.
So no worry in the upper end of the market. I guess, why Rima is asking whether it's sustainable is because there are some signs that you're seeing of a slowdown, right? Let me put some data to that. And Anuj Puri, I want you to come in on this. In the Bengaluru market, Sobha saw a bit of a flat performance. And we've also got data indicating that rents have surged in the Bengaluru market. So perhaps people now preferring to rent rather than buy. Also, there are layoffs, there's the whole IT space which is under pressure. So that brings us to the question, are you seeing a slowdown in a market like Bengaluru as far as purchasing of houses in the residential market is concerned? Not affordable, the general market as per se. And if yes, can you quantify that for us?
So I'll divide into two parts. One is the overall performance of the real estate. And as Ghulam said, is that we've not seen this kind of vibrancy for a very, very long time. In fact, I would say in the last 10 years, we've not seen this kind of fundamental demand vibrancy coming in. It's not led by speculators, it's not led by investors, and it's not only just launches that are getting sold. During the sustenance, we're seeing the regular sales continuing. You look at all the listed guys, just before us, there was a speaker and he was talking about it. Look at it, so fundamentally, demand is very, very strong. Yes, Bangalore has got a little bit of a setback, and that has largely been because of the tech slowdown. And the moment the tech slowdown has happened is the pause on the residential. We're starting to see that. Would this continue to remain? I'm not so sure, because the way we are seeing on the office market, the energy coming back in Bangalore, because more US corporates are starting to outsource their work to take advantage of the cost. I do feel is that the cycle of recruitment will start once again, and once that happens, is that Bangalore will be able to get back onto the map of the demand. But you're right. At this moment in time, we are seeing a bit of a pause in the Bangalore residential market. But my thought is that you will see this market come back as the commercial leasing starts to prop up again, with more US corporates starting to outsource, particularly in Bangalore.
All right. Thanks for that, gentlemen. Well, let's get in Mr. Raheja as well into this conversation. Hi, Mr. Raheja. Good morning. What's your sense on demand, sir? As strong as ever? And if you could break it up for us, are you seeing more amount of demand for new projects, or the redevelopment projects are also seeing fair bit of traction? Mr. Raheja? Oopsie.
Yes, I'm there.
Yeah, please go ahead, sir. My question to you was that demand is strong on ground in the Mumbai market. What is your sense? Are you seeing new projects which are getting that good amount of demand, or are some of those redevelopment projects as well? Break it up for us. Your understanding.
I'm looking after NCR, and in NCR there is a great upswing, total change in sentiment index of home buyers, even for new launches. Even the ready-to-move-in inventory is also getting liquidated and almost liquidated now, very fast. So it is all across. It is all across. There is a big change. What we suffered for about now almost 8 to 10 years, we have been suffering because of lack of demand. There is a sudden and dramatic change in demand now. And there are crowds at every place,
Oh, okay. Ghulam, I wanted your thoughts on what Anuj was saying a while back about how there's a slowdown in the Bengaluru market, and that's largely because of the tech industry slowing down. How bad is it currently, and do you think it's something that's, is it going to bounce back, or do you think it could be a prolonged issue?
I would not say that it's that much of a setback, because what you are looking at is, the March of 23 vis-a-vis March of 22. And of course, let's not forget that 22, that phase was very, very exuberant and huge number of sales happening. But if you look at the long term, say last 4-5 years, this month also was not bad. So I would still say that while there are some signs of slowdown, but we need to wait and watch. And that's exactly what even Mr. Puri was talking about, that we should not really jump to the conclusion that markets are going down. And especially something that I'm sure you also had on card, somebody was talking about it, the flattening of the rate hikes also will have an impact. Because let's look at it this way. The worst impacted of the market segment because of the rate hikes was the mid to low end. And with some signs of stability coming over there, we are expecting that the markets will look back, and Bengaluru market especially, set aside Mumbai. Mumbai is still very, very high-end market. Most of it is mid to high end. But in Bangalore, you still have a huge number of transactions happening, which are 1 crore and below size of products. And that is where home loan interest rates do matter a lot. So we are expecting with this flattening of the interest rate hikes, we will see some amount of exuberance coming back, returning. So I would say we'll need to really wait and see how even Bangalore market is going to perform. Next few months, going forward from where Mr. Anuj Puri said that we will see some outsourcing impact and benefits coming to Bengaluru, and interest rate stabilization put together, we'll see a bounce back in Bengaluru market as well.
Anuj, last year on an aggregate, someone told me real estate prices went up by approximately 7% after remaining stagnant for almost 5-7 years prior to that, in the prior periods. In FY24, what's the extent of price increases we should expect? If you could break it down region-wise and then give us an aggregate number if you have if you have some details on this.
Yeah, absolutely. So I'll give you the aggregate number first. Our thought is that the prices will continue to go up, and it'll be in line with the inflation. And that's largely because the developers really don't have the ability to absorb any increase in the price and retain it themselves. They are passing it to the consumer. So as a result of which, any increase in the input cost is being passed on to the consumer. And hence our thought is that the rate of inflation is with which you're going to see the price rise happen, which to our mind will be anywhere between 6 to 7% over the FY24 across major cities. So, whether it's all the metro cities or the tier 2 cities, we will continue to see that sort of a price hike. But if you were to differentiate some of the good quality developers, some of the premium developers, some of the listed guys, you will see is that their price rise will be even more. And on the luxury premium, the price rise would be even more than the inflation rate. And that's because the ability of those buyers on the luxury and premium to pay a slightly higher price is there. And good quality developers are demanding a lot more premium to the other developers. So barring those two segments, otherwise, 6 to 7% increase in the prices across all the cities.
Okay, but we appreciate your thoughts, gentlemen. Thanks a lot for joining